Are you tired of losing money in the forex market? So welcome aboard in the Diesel FX podcast. We are here specifically for trading. I'm going to be taking you along the top-down analysis, and I'm going to be showing you how you analyze gold from the higher time frames to the lower time frames, in order for you not to make a lot of losses during your trading. A lot of traders have been looking for different strategies and different ways to trade gold without losing that much. Remember, in trading you cannot fight losing, but you can only limit your losses. Remember, you have to win more than you lose. So you have to be a profitable trader, you have to be winning more than losing. But most traders find themselves in a position where they are losing more than they are actually winning. So guys, you are my friend here on the Diesel FX podcast. I don't want you to be I want you to be in the 1%. I don't want you to be in the 99% of those traders that lose money more than they win. So come along to my video, and I'll show you how you're going to be making profits in the forex markets. So guys, come with me into my screen, and I show you what we are going to be looking at, starting from the higher time frames. So I'm gonna be starting on the monthly time frame. Yeah, let's fast rate a little bit. So guys, I've started on the monthly time frame. As you can see, I have some drawings there, but don't mind them. Those are my drawings that I use when I'm doing my back testing. Those are my drawings that I use during my back testing. As you can see on the monthly time frame, let me first hide these drawings. You can see it properly that gold is on an uptrend since 2024. Gold has been shooting to the upside, but coming to 2026 in March, gold gave us its first red candle, meaning it gave us its first bearish candle. In other words, it looks like an engulfing candle as we are seeing it, but it's not that perfect engulfing candle. So as you can see, so gold is showing that it's heading to the downside, maybe up to 3,295. That's why I think that gold will reach, as you can see, because if you calculate with how many pips are these from this first rally, yeah, these are 900 pips from the first rally. So these are whoa. So it might come up to this area here, yeah, up to 3,799. That's the price that I think gold will hit. But let me go on the weekly. So guys, if I on the top down analysis, ensure that you use each time frame very well. So the monthly time frame only shows you the bigger picture, of the market, where the market is heading, how has it been trending over the years. After seeing that, so to get the proper trend and to mark out your zones, you mark out your zones from the weekly. So I'm going to drop down to the weekly time frame, and I'm going to be showing you what we shall be looking at. So on the weekly time frame is where I draw my zones, the zones that I'm going to be looking at. The zones, let me just widen my screen a little bit. The zones that I'm going to be looking at to make my trading decisions. So I'm going to be placing a trend line. I'm going to be placing a trend line. Let me first so I'm going to be placing a trend line. I'm going to be placing a trend line, as you see. Here's this thing, from this swing to something like this. No, first wait. Let me first delete. Let me first delete all these drawings because they're just confusing you. So let me draw my nice trend line from this touch till this touch. So you can see this trend line. It had the first touch, the second touch, the third touch, and this is like a weak, but you can call it the fourth touch. But this trend line was broken, as you can see. I remember each time a trend line is broken and retested, you can see that it broke it strongly with a very with the momentum candle, and it retraced back to the trend line. So this one indicates that we are going to the downside of the market. So we are going bearish. So you see, let me just see our possible first. Let me mark out our possible targets. So gold could move up to this level before it continues heading up, before it continues to the bullish, to the upper trend. I think it's going to come and test this region before it heads up. So after marking those points there, I go down to the daily. Now on the daily time frame is where we see our immediate trend, a trend that we can actually trade. On the daily is where we follow our trend that we can actually trade. Now on the daily, you can see something. This is where price was broken. It gave us this double tops. Remember, in the reversal patterns that we have, we also have the double top, double bottom. So this one was the double top, a nice one. But if you look in clearly here, it also gave us a head and shoulder on this this one, because this one is the left leg, this one is the right leg. So in the right leg, it also gave us the head and shoulder pattern that gave us another confirmation that gold was heading to the downside. So I would have taken this trade, but because this is a higher time frame, remember I don't trade on the higher time frame. I normally execute on the 1 hour time frame, but all these time frames I usually use them for the top down analysis. So this is what I was telling you, that gold broke out and retested this trend line. So now it's heading to the downside, and you look clearly at this retracement area. Let me just mark it in the box to give you a very nice picture. Let me just mark it in the box to give you a very nice picture. I want to give you a very nice picture. I will. This is my rectangle. So you see this area. This is the retracement area. Now what are we seeing in the retracement area here? What we are seeing in the retracement area that I've just drawn, we are seeing a head and shoulder pattern that is actually created, confirming, and this head and shoulder pattern is created on the daily time frame, confirming that price is going to be going to the downside. So let me just mark this head and shoulder pattern quickly to make it really very nice. So this one is the left shoulder retracing back, this one is the head retracing, breaking structure, giving us the right shoulder, then heading to the downside. So this is how it's looking at this moment. So I'm going to be heading to the 4-hour time frame to get my last trend that I use. Now already I have the bias of the market already. I already have the bias of the market that the market is heading to the downside. I can choose to go on the 4-hour time frame or to just go straight on the 1-hour time frame to look for my entry zones. But remember, I have to mark out the most immediate trend, and that one I can only mark it out because these trend lines are like guidelines. They give you guidelines on take profits and to show you how the market is moving. So I'm gonna be just marking out something very quick here on this lower time frame, the 4-hour time frame. And remember guys, I'm a swing trader or intraday trader. I'm not a scalper, so I don't trade below the 1-hour time frame. So as you can see, I can draw something like this, something like this, something like this. So you can see that the trend line was broken. These are all confirmation to show you that we are going to the downside. So then I go to my time frame that I usually like to take trades from, and that's the 1-hour time frames. So guys, you have been seeing how I've been breaking down the time frames from the higher time frames going to the lower time frames. That's the way you should always also trade, because I've actually tested this way of trading that is actually accurate 75% times out of the 25% that are remaining. So guys, this is the only approach that you can always maximize on and maximize your profits. So guys, going on the 1-hour time frame, we can see that our trend line was broken. So this is the time frame that we always take our entries from. Usually my type of entering the market, I usually use the head and shoulder pattern. I usually use the head and shoulder pattern to enter my markets. So at this point, we already have our head and shoulder pattern. We've had this first head and shoulder pattern. This one was formed before price had broken this trend line, but it came back to give us the left shoulder, and it retraced at that trend line, as you can see it properly. So but price already gave us another trend, another head and shoulder pattern that we can actually mark. Let me mark for you the second head and shoulder pattern that we can actually go with. So call this one the first the left shoulder. Call this one the left shoulder. Pressing this and giving us this. Boom. So this is it. Price, this one is the left shoulder, head, and the right shoulder. So this is what triggered my entry. So I will be entering. I entered this market targeting this region. Let me first zoom out a little bit. Targeting this zone because I've came out from the higher time frames. All the time frames are confirming that price is going to the downside. So I targeted this area, giving me a risk to reward of, remember guys, all my stop losses are placed above the left shoulder, the first shoulder that was created, and I usually leave like 10 to 12 pips, and I put it 12 pips above that the left shoulder. That's the way I like to set up my stop losses, because a lot of times prices tries to test this area again. As you can see, it was testing it multiple times. So guys, let me first put for you this and I show you what I was looking at. It was a short, so I was looking at something like this. As you can see, something like this, something like this, something like this, something like that, something like that, targeting this. So this is a risk to reward. It's a 1 to 6, as you can see it is a 1 to 6 risk to reward, giving you, it gave me let me calculate the pips. It gave me 174 pips, approximately giving me 200 pips. So guys, this is the only way you should be trading the forex markets in order to avoid the maximum losses and being at the anxiety, and stop blowing accounts. It has been the Diesel FX podcast. Endeavor to subscribe to my channel and to give me a thumbs up, because this does us very well on our channel. And I'm out. Peace.